Hey everyone, welcome back to Corporate Decoder, the place where we break down those big corporate filings into plain English. And boy do we have a juicy one today. This is ContextLogic Holdings Inc. The company behind the Wish app and their latest quarterly report is full of unexpected twists and turns. So this is a 10Q filing, a quarterly report that companies have to submit to the Securities and Exchange Commission, or SEC. It gives us a snapshot of how the company is doing financially over a 3-month period. And this one for the quarter ending the 30th of September 2025 has some big news. First up, the company has gone through a major reorganization. They basically restructured their whole company. Think of it like moving from one house to another, but keeping all the furniture. They even changed the names. This happened around July and August 2025, and it looks like they are preparing for some big things. Now let's dive into the numbers. On the 30th of September 2025, the company had about $102 million in cash and cash equivalents, and another $116 million in marketable securities. That is a good chunk of change, totaling over $200 million. But here is where it gets interesting. Back on the 31st of December 2024, they only had $156 million in total assets, so their cash reserves have grown significantly. Looking at their income statement, things are pretty quiet on the revenue front. For the 3 months ending the 30th of September 2025, they reported zero revenue. Yes, zero for the entire 9-month period ending the 30th of September 2025, they also reported zero revenue. This is a massive change from 2024 when they had $43 million in revenue for the same 9-month period. Why the zero revenue? It all goes back to a big event on the 19th of April 2024 called the asset sale. Essentially, they sold off most of their business, the Wish platform, and all its operations. So they are no longer in the business of connecting merchants and consumers globally. This sale resulted in a gain of $4 million for the company. It means they got more money from selling the business than it was worth on their books. This is important because it shows they cashed out at a favorable price. Now let's talk about cash flow. For the 9 months ending the 30th of September 2025, they used $14 million in operating activities. This means their day-to-day operations are costing them money. It is not a huge amount, but it is more than they brought in from operations. They also used $29 million in investing activities, mostly buying more marketable securities, which makes sense given they are now a holding company with a lot of cash. On the financing side, they brought in $72 million from issuing redeemable convertible preferred units. This is really key. It looks like they are bringing in cash through new investments as part of their strategy to grow or acquire new businesses. This preferred unit investment seems to be from BCP Special Opportunities Fund III Originations LP. They invested $75 million initially. These units have special conditions and can be redeemed under certain circumstances, which is why they are listed under redeemable non-controlling interest. This investment essentially means they have a new significant partner helping them move forward. Something else that caught my eye is their executive compensation. Around March 2025, they brought in a new CEO, Rishi Bahaj, and gave him a hefty pay package that includes Class P units in Holdings, LLC. These units are tied to vesting over time and achieving performance goals. This shows they are incentivizing leadership to drive future growth. The total stock-based compensation was $5 million for the 9-month period. Remember that revolving credit facility they had? Well, they terminated it in April 2024. This makes sense since they sold off the operating business that needed that credit line. They've also managed to get back $1 million in cash collateral that was previously restricted. Now, for the legal side, they are still dealing with some old lawsuits from their initial public offering days. Some have been dismissed, but one is still making its way through the appeals process. The company believes these lawsuits are without merit and is fighting them. It is good they think they will win, but legal battles can be costly and unpredictable. Looking at their risk factors, this is where they tell you what could go wrong. A major one is the delisting from NASDAQ. They moved to the OTCQB venture market. This means their stock might be harder to trade for some investors and the trading volume could be lower. They also highlight risks related to their reorganization and the transfer restrictions on their stock, which are there to help them preserve their net operating losses, or NOL-S. These NOL-S are basically tax benefits from past losses that can reduce future tax bills, but preserving them can make it harder to sell shares or be acquired. So what is ContextLogic Holdings Inc. doing now? They have essentially sold their old business and are sitting on a pile of cash. Their main focus is now evaluating strategic alternatives for this cash. They are looking to potentially acquire new businesses or assets. They specifically mentioned using their cash to fund acquisitions that could help them utilize their net operating losses, which is a smart move from a tax perspective. They are not registered as an investment company, so they are not limited to just being an investment firm. Overall, the story here is one of transformation. ContextLogic has shed its old skin as a marketplace operator and is now in a new phase focused on strategic growth and utilizing its significant cash reserves and tax benefits. The sale of their core business clearly marks the end of an era and the beginning of a new chapter. The key question now is what kind of business will they acquire and how successful will they be in turning the company around and generating value for shareholders. The large cash pile and the Knoll S provide a strong foundation, but the execution of their acquisition strategy will be critical. The delisting from Nasdaq is a concern for liquidity, but it might have been a cost-saving measure that made sense for their current situation as they pivot to a new strategy. Alright, that is our breakdown of ContextLogic Holdings Inc., its latest filing. What do you think of this transformation from a marketplace to a holding company with a focus on future acquisitions? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into corporate finance, and don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you next time.